Well, with Nigeria's landmark Eurobond attracting global investor confidence, can this signal a turning point for the country's economic transformation? Good morning. It's another power-packed episode of Business Week. This week, Nigeria flexes its financial muscle with a $2.2 billion Eurobond that's causing a buzz from Lagos to Wall Street, while TikTok prepares for a dramatic U.S. exit that could reshape the digital content world. And over in Washington, Donald Trump fires shots at the BRICS nations, threatening 100% tariffs on anyone daring to abandon the US dollar. And OPEC Plus tightens the taps until 2026, playing the long game on oil supply. Meanwhile, the tragic murder of United Healthcare CEO has health insurance firms scrambling to reassess the risks to their top execs. And in today's Deep Dive, I'll be joined by the unstoppable business leader and distinguished entrepreneur, Adenike Ogunlesi, to talk about building legacies amidst the tough economic climate. I'm Rolake Akinwe-Filani, here to help you catch up on the stories that mattered the most from the week. Stay tuned. As always, we'll start with a look at global energy commodities. First, we're looking at Brent crude, which was down by 1.28. WTI also down. Natural gas was the only one up. RBOB gasoline down. Well, what's causing this kind of downward trend in the market? Well, probably a moderation in fears around global supplies, although the OPEC Plus story will be exploring that a bit later. WTI also was down in the U.S. By 1.35%. U.S. oil inventories also not doing so great in terms of growth from the previous week. Let's take a look at global equities markets. Of course, starting here in Nigeria, the all share index of the Nigeria exchange was up at the end of trading on Friday by 0.10%, closing the week at 98,210.75 points, over 7,000 deals consummated, a volume of shares of about 1.04 billion. That's the highest we've seen in quite a while. Value of 17.46 billion, and market cap closing the week at 59.5 trillion naira. Let's take a look at Africa. Across the continent, it was almost a positive sweep. Flattish, of course, in Accra. The stock market's not reacting either way to presidential elections taking place today. It's going to be a hotly contested one, I tell you, because the economy is big news. I'll talk about that a bit later. But Joburg finished the week in a positive territory, up by 0.11%. Nairobi was also up by 0.79%, but Casablanca in Morocco was down by 0.8%. Let's look at Wall Street. It was all green. All very green. Green shoots across Dow Jones, Industrial Index, S&P 500, and NASDAQ Composite Index, all closing up in positive territory. Of course, markets are firmly betting on a rate cut by the U.S. Fed at the next cycle of rate review. And that's on the back of positive jobs data coming out. We saw the farm payroll data come out in the past week, looking very, very positive. So I'm also betting on a rate cut, and markets are reacting very positively to that. Let's take a look at my top picks from around the world in the past week. Well, the first one I talked about from the top of the show is Nigeria has gone back to the Eurobond market after a 2-year break. Not since 2022, I believe. Raised $2.2 billion in 2 tranches. About 60% of the offer, the bid, came from international investors, a signal of returning confidence in the government's macroeconomic reforms. This is really positive signaling for Nigeria. About 15 to 20% came from local pension funds and institutional investors in Nigeria. But key things to note, there were 2 tranches of the Eurobond issued, one for a 10-year period at a coupon rate of about 10.3%, and one for a 6.5-year period at a coupon rate of about 9.6%. So Nigeria joins Cote d'Ivoire, Benin, Kenya, South Africa, who've all gone to the Eurobond markets this year. So this is positive news, and the money is meant to help the government finance a fiscal deficit this year, 2024, of around 5.8 billion. Part finance, anyway. Some of the proceeds will also be used for other purposes. So good news there for Nigeria. Over in the U.S., executive protection is in the limelight after the orchestrate a killing of United Healthcare CEO Brian Thompson during the week in a New York Manhattan Midtown hotel. Even we had CVS Insurance, the pharmaceutical company in the US, its insurance arm, has removed the profiles of all its key executives from its website. And there's now talk of how much adequate security and protection services are being given to high-profile CEOs from big multinationals around the world, not just in the US, but in other countries. Of course, that manhunt is still on by the authorities in New York, who said that the suspect has probably left the state. So we'll be following that news closely. But the health insurance story firmly in the news, the issue of protection and reassessing the risks to high-profile executives will be one that we'll be discussing for a while. There's a historic EU-South America trade deal. Now, this trade deal was struck under the leadership of Ursula von der Leyen, EU president, and it's a landmark deal that's meant to phase out 90% of tariffs on goods traded between the EU and the Mercosur group. Now, the Mercosur group is a group of South American countries, Uruguay, Paraguay, Bolivia, Brazil, and they are creating a free trade area that could boost the partnership's GDP by about $80 billion and create a market of 700 million people. So this is a landmark deal. However, there are forces in the EU who are not fully supportive. France is saying that the open market for South American exports, such as beef, agricultural produce to the EU, is not a great thing. But members of the EU, some states in the EU, are also happy about market access to South America. But it's a landmark one for the EU under von der Leyen's leadership. And it's the first time such a deal has been struck between that grouping and the European Union. So free trade is the name of the game. High living costs and interest rates are defining the other game in Ghana. Today is the presidential election in Ghana. Accra, the NDC, and the ruling party, NPP, that's Bawumia and John Mahama, are going head-to-head as the two leading candidates under this election. Of course, let's not forget that Ghana is currently in the second or third year of a $3 billion IMF restructuring program after the default on some of its debt from some years back. We're seeing inflation also over 36%, high interest rates. Of course, that will be a key defining issue for the elections this year in Ghana. Here on the Rise, we'll be following those elections very quickly. And finally, TikTok is set to be banned in the US following a ruling by the courts. Now, the Biden administration had cited TikTok as a threat to the country's national security. And so the parent company, the Chinese parent company of TikTok, a company called ByteDance, is also now threatening, through the Chinese government, retaliatory measures around this ban. But this is a major one because TikTok has over 150 million users in the US. Interestingly, Donald Trump is not really an advocate of this ban. He's said that many times before. So time will tell whether the Trump administration come January next year will look at influencing the outcome of this. Well, that's it for my top picks for the past week. And now for some other top stories from around the world. We're starting France, where France's government collapsed on Wednesday after Prime Minister Michel Barnier was forced out in a no-confidence vote in parliament, reigniting a summertime political crisis for the country as it prepares to face a new year. Barnier resigned after 331 of the 577 lawmakers in France's National Assembly voted against him. He was appointed in September by Emmanuel Macron after an inconclusive July parliamentary election. His exit will mean his tenure as prime minister is the shortest lived in modern French history. Now, US President-elect Donald Trump has threatened to impose 100% tariffs on members of the BRICS nations, an unofficial group of nations that includes China, Russia, Brazil, India, South Africa, should they try to switch from using the US dollar to another currency. The president-elect stated in a post on his social media platform, Truth Social, on November 30, that any nations who support a different currency to replace the US dollar will eventually say goodbye to selling in the US and suffer higher tariffs on goods. Well, in the U.S., still former Georgia Senator David Perdue was nominated by President-elect Donald Trump to serve as China's ambassador during a particularly contentious period in the country's relationship with the U.S. Trump chose Perdue to navigate the choppy waters of diplomacy between the two nations, citing his background in business. Trump has obviously previously pledged to impose 10% tariffs on Chinese goods until the nation halts the global distribution of fentanyl-related substances. U.S. job creation in November rebounded from a near standstill the prior month as the effects of a significant labor strike and violent storms in the Southeast receded. That's according to the Bureau of Labor Statistics. Non-farm payrolls increased by 227,000 for the month, compared to an upwardly revised 36,000 in October and the Dow Jones Consensus estimate for 2014. The unemployment rate, however, edged higher to 4.2% as expected. The unemployment rate actually rose as the labor force participation rate edged lower and the labor force itself declined. In South Korea, following the lifting of a surprise martial law declaration by the president Yoon Suk-yeol, the Bank of Korea announced on Wednesday that it would provide short-term liquidity and implement measures to stabilize the forex market as needed. Now, the declaration was made soon after the emergency board meeting of the Bank of Korea, which began at approximately early hours, 9 a.m. of that day. And if necessary, the central bank has said it will also make any special loans available to infuse funds into the market. That's according to a statement that was released following that meeting. And finally, according to delegate sources and internal documents, the OPEC Plus Oil Producers Coalition has delayed plans to end a number of official and voluntary crude output curbs until 2026 due to sluggish forecasts for global demand. Due to the delicate nature of the conversations, the sources were only permitted to remain anonymous. The larger OPEC Plus alliance, which had previously only applied this restriction until 2025, is now limiting its total production to 39.7 million barrels per day until December 2026 as part of its output policy. Well, that's all we have time for now on our top stories from around the world.